Welcome back to the Hunter of Dividends YouTube channel. Here today to talk about JP Morgan Chase, ticker symbol JPM. This is a viewer request here. This is the first one of these I've done. Looking forward to doing more of these. So whenever you have any kind of request of stocks that you want me to take a look at, certainly drop those in the comments or send me a message by DM or send me a message anyway on Twitter at Hunt Dividends. Excited to look through some of these stocks. It helps me with my research, and I hope it helps everybody else to be able to look through, the Simply Safe Dividends picture, the fast graphs, valuation tools. Both of those are things that I really highly suggest. I think they're very helpful for especially dividend investors trying to get good values. Let's take a look at JP Morgan Chase. And I do want to say here to start that JP Morgan Chase earnings were less than stellar, down 28% with some loan issues. Jamie Dimon was a little bit less than enthusiastic about the economy, to say the least. Some other stocks in the banking industry did have better results. JP Morgan Chase has been best of breed for many years. I'm not concerned about JP Morgan. Long term, I do want to look at some of these breakdowns here. Let's look at Simply Safe Dividends first. And I will say, starting off, I do not own JP Morgan Chase. I own others similar in the industry, which is one of the reasons I haven't bought JP Morgan Chase. But I do want to be honest and transparent all the time. And I will let you know if I own the stock or not when I'm giving a breakdown or analysis of this. Certainly, I'm not a investment advisor, so do your own due diligence. But I hope that this kind of information is helpful. Let's take a look here at Simply Safe Dividends. 3.54% dividend yield for JP Morgan Chase, 60 on a dividend safety score from Simply Safe Dividends, which is borderline safe. Not as good of a rating as you would really love to see, but a lot of the banks have lower ratings because they've shown that they're a lot more willing to cut their dividend when there is a recession. JP Morgan, a market cap $317 billion. What a massive company. We look at how they did last time in a recession, negative 65%. The S&P was down 55%. We know that recession had a lot to do about the financial industry as well. So that's a large reason why it went that way. And you can see the dividend was cut and now it's gone back up consistently. If we look at timeliness, the dividend yield is quite a bit higher than its 5-year average. The forward PE ratio is 9.3. I do want to say that financials in general, 9.0. So JP Morgan usually trades at a bit of a premium. It is a really good name. This one is a little bit tricky because the earnings estimates right now might be a little bit too high considering what Jamie Dimon had to say and the outlook not being tremendous. The earnings payout ratio of only 32% is very good. That would make me think that their dividend is at least fairly safe. That's why it does have a 60 dividend safety score. Free cash flow is all over the place at JP Morgan. This is seen often in banks. You're going to see some noisy action and free cash flow. And the earnings in general have been pretty nice growth overall. 2020 obviously stands out, but we know why that was with the COVID year. Shares outstanding has been going down. They did suspend their repurchase program, which is at least a little bit of a concern. Return on equity has been solid. And here, as we look at JP Morgan, to me, this looks like a company that, is not trading at a premium like it usually would. The beta is 0.87, but really, if you look back many years, there are times that JP Morgan does drop in a big way, along with the financial industry. You do need to be ready for a bit of a yo-yo in this industry. So I do want to mention that. Let's look at fast graphs here to take a look at the valuation side of things for JP Morgan Chase. Now, I am recording this on Friday, July 15th here. It's about 6:30 p.m. Eastern. The price has not updated from Friday's close, which JP Morgan Chase did go up about $5 a share, 4.6%, with the market jumping in a big way here on Friday. So that's why you see this number here. This one is going to be very close as far as the graphs, but not exactly. I'm recording this video here because I'm about to head out for vacation with my family. So I'm going to be out for a couple of weeks, taking the kids to Disney. Hopefully it'll be a lot of fun. It's going to be really hot, that's for sure. So let's take a look here at JP Morgan Chase. At the historical look, I'm going to look at the last 10 years. We're going to go, we don't want to go all the way back to the recession with this, at least not yet. This is trading below its normal PE, a blended PE of 8.17, which would be probably closer to 9 at this point. Dividend yield is 3.54%. The blue line is where JP Morgan has usually traded. You see it does kind of go above and below the blue line. And right now it is below the blue line. Now, where exactly will earnings be coming up? I think that's a bit tricky to look at a picture of that right now. Operating cash flow, which I really like to look at for dividend stocks. Right now, you see the blue line is where they usually have been. These are really noisy charts for these banking companies, especially with the COVID year thrown in there. But it is below again. If we go back even farther and look back 20 years, you'll see JP Morgan in general has been pretty close to the blue line. And again, if we go back to operating earnings on a 20-year, you'll see this is the 2008 Great Recession. It has stayed pretty close to the blue line. So if you think the analysts are at least close to right about the earnings estimates for JP Morgan, it might be a decent value here as we look. Let's look at forecasting, and this is just analyst estimates. If you look at the analyst estimates of what they are right now, you could get a great rate of return. If they're correct, going out through 2024, they're suggesting about a 32%, 33% annual rate of return. This is based on adjusted operating earnings kind of being normalized to a 15 times level. I will say, I think that the financials will trade lower than a 15 multiple because of the unknown about the economy, and the Great Recession really left people a bit worried about the financials, that they have not traded at the same kind of valuation level. Chuck from Fast Graphs has had some great videos about that. Certainly recommend their YouTube channel as well as their site. But the financials are at least somewhat out of favor compared to what they used to be. So if we look at operating cash flow, that there's not long-term estimates for that. So if we look at sales are tricky here. This looks like if you go out, it'd be about flat rate of return through 2024. And I'll look at EBITDA. There's no estimates for that. With the financials, that's usually not as widely available. Diluted earnings, you can see again, this looks very good from that standpoint. If we look at long-term growth, again, this looks like it would be a winner. The question is whether you think these analyst estimates are accurate. This is historic CAGR. Based on the CAGR here of JPM, this looks like a good buy. I will tell you, I own a couple other names in the industry. I do own Morgan Stanley. I like it a little bit better than JP Morgan Chase, a little bit higher dividend. I think that they're both quality companies. I wouldn't blame anybody for owning JP Morgan Chase. I think the way I would rather own JP Morgan Chase is through an ETF. Plenty of these dividend ETFs, SCHD being my favorite of those, do have JP Morgan Chase in them. We'll talk about that in future videos coming up, but I did want to break down JP Morgan Chase a little bit here today for the viewer request. I have a couple others coming up, but as I said, I will be covering those viewer requests when I get back. Going to be gone here for a couple weeks on a Disney vacation with the kids, who are pretty young and they should enjoy it. So looking forward to that. I appreciate everybody tuning in. Subscribe to this channel if you haven't already. Give us a thumbs up if you appreciate this information. We'll keep looking at these Simply Safe dividends and Fast Graphs information and see if we can find some winning dividend plays here in the long run. And JP Morgan Chase, it's been a great stock long term. Probably will be a good stock again in the long run. Is now a great time to buy it? I'm not sure. I don't dislike the stock. I'm not going to buy the stock myself right now. So hope everybody has a great next week or two, and keep trying to find those quality